Financial markets have opened this Monday in favor of the US dollar, which has gained against the euro, the British pound, and gold. Europe and large parts of Asia remain closed for banking trading holiday, so market moves have been largely muted and lack inspiration. If we look at the dollar index, it fell to 5-month lows last week and closed the overall week minus 0.28% lower. And perhaps the largest talking point was Friday's lower than expected US GDP reading. The data showed that US GDP during Q1 grew to 0.7%. This was well below the expectations of 1.2% and below the overall Q4 reading of 2.5%. A lot of the losses in the GDP reading can be attributed to drops in business inventories, which fell to $10.3 billion in Q1. This was down from $49.6 billion in Q4, as well as drops in government spending. But perhaps the key drawdown in the US GDP reading report was the drop in consumer spending, which fell to 0.3%, down from 3.5%. If you look at the reaction in the markets, the dollar continued to close higher on Friday following the report, and it opened Monday higher. This basically shows that the markets are seeing this slower than expected GDP reading to be transitory and temporary in nature due to the milder weather conditions that we experienced in Q1. So overall, we're not expecting this to alter the mindset of the Fed, who are set to convene on Wednesday. Remember, the Fed is not expected to increase rates until June at the very earliest, and the overall US economic picture remains very positive. Employment continues to grow, and consumer confidence is at multi-year highs. So we don't expect to see any major changes when the Fed is set to convene on Wednesday. Overall, looking ahead to the US economic calendar, we have personal income, personal spending, and personal consumer figures due out at 12:30 GMT. This will be followed by the ISM manufacturing index due out at 1600 GMT.